Hey everybody, this is Nate Smoyer, and you're listening to the Tech Nest Podcast. This is the show where we sit down with the leaders in real estate and technology to find out what they're doing to transform the way we buy, sell, and invest in real estate. If you've got an interest in real estate and technology, stick around. You're in the right place.
Good morning, good afternoon, good evening, wherever you're at, it's good, and we've got a good show for you lined up today. We've got the co-founder of a company called LEX. Drew Sterrett is going to be on the show today. We're talking about what they're doing in building the world's first stock exchange for commercial real estate. As the website says, don't buy brands, buy buildings. So instead of going out and buying Tesla or buying what do people buy on the stock market these days? Home Depot, Lowe's? I'm not sure what the hottest stocks is. I've been paying attention to real estate. But instead of buying those brands, why not buy the buildings around you, in your neighborhood, in your favorite city, in your favorite destination place? And that's what Drew's asking. We talk about why this is a good thing, how that's going to work, when it's going to be available, who's likely to use it. And then we get into a few other things that I didn't see us getting into, like, hey, when things to consider when raising money for your startup, or maybe you shouldn't raise money for your startup. So anyway, really excited for this one. I think you'll enjoy it. Listen in. Well, hey, Drew, welcome to the show.
Thank you so much for having me, Nate. Really appreciate it.
Yeah, I appreciate you taking the time on a Saturday to join me here. We are live streaming again, TechNest Live. That's going to be my new sub brand. It's TechNest Live. Maybe one day when I'm competing with Cheddar. I appreciate you taking the time on a Saturday to do this. I apologize in advance if I end up having a coughing fit in the middle of this. I'm coming off a brutal cold. As the Chicago winter finally caught up to me, I've been taunting it, saying, give me your best, give me your hardest. And this week it did. It knocked me on my butt. So anyway, before we get started here, let's start off with the basics. Please go ahead, introduce yourself, let everyone know who you are and what you do.
Hi, I'm Drew Sterrett. I'm the CEO of LEX, allowing everyone to access commercial real estate side by side with institutional owners and sponsors.
Okay, that's not even the slightest bit of a just subtle thing. There's a lot of apps out there. There's a lot of you can compare buildings to buildings, but you just went on and just to the next level, said you created the first stock exchange. Okay, so all right, let's break this down and jump into it, the meat here. What's the big problem you're trying to solve?
So the big problem we're trying to solve is opening up one of the oldest and largest asset classes in the world to all investors while allowing them to have transparency, liquidity, and access.
Okay, and for the layman's out there, how does that help them? What do they do with that information?
One, it gives them for the first time ever the ability to invest in these type of commercial assets. So me, myself, I was priced out of this in the very beginning, and that was actually one of the catalysts for the creation of LEX. And so we were trying to figure out how we open it up to the everyday folk, and then also allowing even the institutional investors who have had access before to actually participate as well and create an attractive offering for them.
Right. Okay. So this is, basically the most people just have no way into getting into real estate investing, let alone getting into Class A or in commercial real estate investing. And this is an opportunity to let people have a share of it. Let them get a slice of it.
Yes. Most of us in everyday America do not have the ability to invest with Blackstone. We don't have $5 to $50 million to put into their multi-billion-dollar fund.
Well, we should even clarify, because many accredited investors don't even have the opportunity to invest with Blackstone, because there's a few different levers here, right? So you have non-accredited, which is the majority of people. Accredited is what? You have to make $250 a year and $1 million in assets minus your personal dwelling.
Yep.
Okay. And then even if you have that much, you don't meet the minimum buy-in to participate in institutional investing.
No, not at all. And then when you do, let's say you even do meet the criteria, you then have to put a significant amount of your holdings into usually one undiversified position. So from an allocation perspective, it's actually not highly advised.
And then from those perspectives, and even still, you're probably not getting the preferred rate of return.
No, no, absolutely not.
So there's a lot of reasons, a lot of things here. It's like, okay, we have to find a new way or a different method of how do we get to participate in these fantastic deals. I want to tackle something before we get into the tax here. I want to tackle something from your website. It says, don't buy brands, buy buildings. Why is that important to you guys? Why is that so significant that it's front and center on the website?
So the whole idea is shifting thought. So we're all used to buying stocks, right? So we saw Tesla take a major hike over the last 2 weeks. Apple's at an all-time high. Amazon's at an all-time high. So we associate and purchase into these stocks that we understand, we know, and we interact with. And the whole idea is we're educating people on a new securities class that they may not be as traditionally familiar with from an investment perspective, but that they deal with on an everyday basis, since everyone has a home or pays rent and they go to work. So they fundamentally understand the whole idea of either they're owning an asset or living in one and participating in one and creating value for that asset. So it's the whole idea of that mind change where instead of buying into Tesla and all these other shares, you're buying into a new security.
Got it. Okay. And yeah, that makes sense to me. At first, actually, when I read it, I was thinking, don't buy into brands as in like, I was thinking of other funds or people, because there's a lot of people, the topic of, and I guess we can talk about this as to why this is different than buying into a syndicate, because, well, many reasons, it's not even the same thing, but I was thinking through like when people have their own brand, a syndicate, like you're buying into that person. That's where my mind went right away. But I think it's the same thing as what you're saying here. One thing that has my curiosity though is because, I'm in the space of prop tech and looking at all the different products that are coming out and services. And there's a lot of talk of fractional ownership and buying and selling and trading and, why is now the time to focus on this area of this way of buying and selling or even viewing real estate as a tradable? Is it fair to say a tradable commodity? Is that the right way to say it?
Well, tradable security.
Security. Okay, thank you. There we go.
Yeah. So sort of a few reasons. One, it's the whole idea of we've seen a movement sort of across the board. We've now have the masterworks of the world, which allow people to invest in artwork, sort of the highest level art that I could have never imagined ever purchasing into, to Rally Road, which allows you to buy fractional ownership in luxury sports cars. There's another company called Otis that allows you to buy fractional ownership in shoes and comic books, which is an asset class that I have never even considered. And we sort of see it across the board. And we sort of saw it pioneered by Lending Club and Prosper with the unsecuritized debt notes that were also able to be traded. So I think there's been a trend and a movement towards opening up alternative asset classes. And given changes in regulation, given advances in technology, given sort of change in public perception, we're now at a point where we're able to truly open up these asset classes to sort of everyone at large. And it's really interesting.
Yeah. Yeah. And that, that's obviously a ton of different options there. And, I think with, there's probably some combination also of like technology meeting market demand, and that once the market demand or awareness, kind of catches up to where technology is, which seems to be more the common tale anymore of, well, if only we could get everyone to just kind of catch up on what's possible, we could do this cool thing over here. So you guys are not yet available, right? So people cannot yet today go and buy and sell shares of buildings.
No, but we're allowing for indications of interest, hopefully within the next 3 weeks. So about 1 days.
Okay, so you guys have like a pre-sign up list, and then what is an early indication of interest? What is that?
So it's a period called testing the waters. And so that allows for people to gain a high level understanding of the investments that are coming through. And so once the investments are qualified, they'll then actually be able to make a purchase of the securities. But this is effectively showing that they are looking to participate once these securities are qualified.
And is that going to be open to both accredited and non-accredited?
Everyone.
Oh, wow. Okay. So I'm on that. I'm on the wait list. So I'm going to get that email that I can indicate early interest.
Yes, absolutely. And also, if you share it with your friends, you're able to move up in the list. I know you did that for Jets.
I did that last weekend or last week, and I had somebody message me about it. And they were like, and they weren't trying to be rude. They said, "What's the big deal?" And I said, "Well," they said, "Well, wait, is it for accredited and not accredited? Because that would be a big deal." And I said, "Well, yes, that is one of the big deals, that anybody is going to be able to participate in this." Who do you think, though, out of because that's a wide range. I mean, what we're essentially saying is that anybody, and your target is that $100 minimum, correct?
Correct. So that's the purchasing of a single share.
Okay, so you can jump in with as little as $100. So if you had nothing, even if you're working at McDonald's, honestly, you could find enough money to figure out a way to buy some real estate, basically. But talk me through, who do you think your ideal customer is going to be? Who's the person that's going to use this?
So it's really everyone across the spectrum. It's people who are just starting to learn about investments themselves, who are looking to create a portfolio for the first time, to everyone sort of on the other end that may already have real estate portfolios and investments and assets that they actually own and operate and manage. Mm-hmm. And so they're also looking for different exposure in different markets and different asset types, and being able to adjust their portfolio quite easily.
Got it. Okay. So you're not saying like we're looking for bankers, we're looking for real estate professionals who are just too busy and don't want to be the landlord. It's really going to be across the board.
Yeah. And that's what we intended.
Yeah.
The whole idea is bringing everyone together. It's not just having one segment or another segment, since you're able to create a very valuable product and also market. Mm-hmm. When you bring everyone sitting side by side with each other.
Okay, so I didn't think of this before the show, but now I'm thinking about it now because you're saying everybody. So could a company, instead of doing 401k contributions, could they set it up with LEX instead?
Correct.
Like, could they do like
also the offerings are ERISA compliant, so you have the ability to put this into different 401k or IRA plans as well.
So you could be investing in real estate pre-tax.
Correct.
Oh, see, that I really like. That I want. I want. I want that now. Give it that to me now. But it's not leveraged money, though, is it?
It's just pro rata equity in individual assets.
Right. Now, how are you going to determine the price per share?
So we base that off of sort of two parts. One is a third-party appraisal who helps actually determine the price of the offering. And then also it's the yield and the cash-on-cash return. So because these are, for the most part, core and core plus stabilized commercial real estate assets, you fundamentally have a decent understanding of what you're purchasing into and have expectations on what your cash returns should be in the go-forward 12 months and looking forward. So investors have the ability to make that determination for themselves. So it sort of gives them a very good understanding, instead of going into an acquisition or a development project where you may have a lot of uncertainty for a long period of time. You're buying into a property that already has operations in place.
Got it. Okay. And so these buildings, obviously there's got to be some sort of qualifications to come onto your marketplace, because I'm assuming you're not just accepting shares of the warehouse that burnt down in the 60s that's been sitting vacant that someone's looking to extract capital out of.
No, not at all. So we have a very rigorous underwriting process.
Okay.
So we took the standards from actually life insurance companies issuing commercial real estate debt, and then actually upped many of the areas where we thought there could be improvements, and just to make sure that we're dealing with the best actors and have data integrity, and the information that we're receiving is what's really important to us.
Why did you go that route? Like what prompted you to look at life insurance?
So they have some of the higher standards when issuing commercial real estate debt security.
Oh, okay.
Yeah.
So you had
They're
some
sort of
insider knowledge that
they are
said go
somewhat
there.
the industry leaders. So
Okay.
try and work off of the best and then improve from there.
I wouldn't have thought that. And maybe I should start thinking about what would an insurance company would do. that should be a new phrase if you're, I don't know, maybe.
Yeah, what would an insurance company do?
The thing is, though, if I ask that on everything, I'm going to not do a whole lot.
No, I think you'll move very slowly and you'll
That's
get.
I mean, that makes things challenging, though, for sure. So we've gone over a few things here from the user perspective. One thing we haven't talked about, though, is minimum hold. So typically if I buy into like a fund, right, and I don't want to create the false comparison here to a fund because I know that it's not exactly the same, but there's usually I have a minimum hold time, which means my capital is not liquid. But if this is buying and selling like stocks, it should be fairly liquid, right?
Correct. So there is no hold period. You have the ability to buy a share and then 3 seconds later sell that same share.
Okay, 2 follow-up questions to that. Then on the site, it says you can trade with no fees.
Correct.
All right. The most obvious third question in that line of sequence is how does LEX make money?
So we make money actually off of a few different business lines. So the real estate owners pay a fee for conducting the offering to the public. And just to clarify, that fee is coming directly from the real estate owner. So the investor, there is no fee load to the investors. So for every dollar purchased of equity, they're receiving that amount of equity. It's not in the old private REIT days where you would have a 10% fee load. So if you put in $100,000, you're only receiving $90,000 of equity. If you're putting $100 in, you're receiving $100 of equity.
Got it. Okay. And so then so basically the fees of like what you're going to make is captured up front.
It's captured up front. And then while we do not charge our retail investors any trading fees, we're also plugging into other financial institutions to be a member of our alternative trading system, which is ATS, one level below a national stock exchange. And so they will be paying trade fees, but for our investors coming through our retail brokerage platforms, they will not have any trading fees.
Got it. Okay.
Then, there's data, there's the ability to white label the alternative trading system to allow others to access the platform. That we have a few different business revenue lines.
Okay. Well, I mean, that's cool. I mean, obviously, you got to make money. If you're not making money, I think the saying goes, if it doesn't make dollars, it doesn't make sense. Right?
Correct.
So
I believe in being a company that works in the black.
Yeah, there you go. See, there you go. I appreciate that. And then well, let's move on from there. I don't want to. There was something else I wanted to go down, but I want to keep moving here. So I want to talk about some of the differentiations because there's, like I mentioned, there's quite a few different opportunities right now. I can buy and sell real estate in a few different fashions on my phone, right? So I can buy into a fund. There's tokenized ownership with. Well, I can't even describe the blockchain crypto opportunities that exist because I still have never had anyone explain it to me in a way that, the old Michael Scott, if you're a fan of The Office, where he's like, explain this to me if I was a 5th grader or something like that. Like, that's how I need someone to finally break down blockchain and crypto. But there's tokenization models out there, and then you have funds. How do you differentiate yourself from all those other opportunities out there? Like, what are the key points of differences?
Yeah, so for the majority of the other players in the space, they're fiduciaries, they are asset managers, they are issuers, and they are also investment advisors. And so what we do here as LEX is really provide real estate owners and investors the ability to access this product and actually conduct this offering on an initial origination basis and going forward through the life cycle of the asset. So we're actually not the issuer. We just enable the real estate owners to capture value by doing this process and then allow investors to come and participate and capture value on the other side of the deal as well. So we're the financial infrastructure. I like to sort of say we're the financial plumbing to allow all of this to happen. So we facilitate this from the beginning to the end.
Got it. Okay. That helps, I think, break it down. I'm still, the next time you and I talk, I'm going to be like, hey, can you break down the difference one more time?
Yeah.
But I'm one of those people, I need it like 6 different times before it finally sets in, and you see my eyeballs get really big. I'm like, I got it.
Well, let me put it this way too. So for all of the other groups that you've sort of mentioned, we have the ability to work with them to create more value for them.
That's interesting to me, because like you're kind of, I don't want to say the platform to rule them all, but
your words, not mine.
I mean, really, I'll go with it, because like if there's funds over here and there's ways of buying into specific buildings over here, and there's, we'll just throw in the crypto. I don't know if that'll apply or not, but we'll just put that in there, in that bucket. But you have the platform, and they can all then actually be part of the platform, and the platform facilitates that transaction just the same. That increases the value to me, because now I'm not having to shop to multiple different places. Like if I do want to manage a portfolio from one app or one central point in keeping track of my money and how it's being used in real estate, I can do that in that way. And that makes a lot more sense to me versus like, imagine trying to buy and sell stocks and having to have different apps just to buy different stocks.
Yeah. A little frustrating and hard to keep track of everything.
Yes. Yeah. It's kind of what real estate is today.
I know. Well, actually, on that note, we're also working to integrate with a number of the major wirehouses and brokerage firms. So let's say you're working and have a bank account or a Robinhood account, you'll be able to access these securities through the places that you already own your other stocks as well.
Oh, okay. Hold on. So like, and I'm breaking the mold of millennialism. I don't have a Robinhood account.
It's okay.
I still haven't signed up for my free Tesla, like $5. But so you're saying I could have a Robinhood account and buy and sell real estate assets, and it would be provided through LEX? Is that how that works?
Correct. So in the future, you should be able to access LEX via all brokerage platforms.
That's awesome. That's really cool. Do you have a date on that one?
We're dealing with 2 of the oldest and largest sort of institutions in the world, commercial real estate owners, and then also financial institutions. I would say commercial real estate owners are heads and shoulders above financial institutions on sort of making you have a little more gray hair. But no, I mean, we're working through many of these integrations right now. So we hope to have it in I wouldn't say the short future, since it takes a little while to go through, just to make sure that we've covered all of our bases from a risk and compliance standpoint. But
right.
Yeah, medium-term future.
Now, I have no doubt you guys have encountered a few challenges in building this product, and I'm assuming some of them would include some governmental red tape. Can you share what have been some of the most significant challenges you had to overcome in creating this product, and also getting it to the point of, really, because you are very close to releasing this to the public, getting to where you're at today? Like what are some of those big hurdles you've had to overcome?
So I would actually say the main, not a pain point, but just point of concentration was making sure that we had a product that fit the needs of the real estate owners, and then also the needs of the investors, in making sure that both sides were aligned. Just so it's a balancing act with everything that we do. I feel like if the pendulum is too far on one side versus the other, you don't have a good experience or a good product, or you just have a little bit of discourse. Mm-hmm. So it's really the balancing act to make sure that we cover and address the needs of both of our primary customers, because they both are customers that we work with, and creating a product that melds together. From a regulatory perspective, I know this sounds a little bit weird, but we sort of view them as a value add. So both FINRA and the SEC, because at the end of the day, they want the exact same thing that we do, which is investor protection and just good actors throughout the entire process. So it's really more working together instead of saying yes or no. So We view them as beneficial for this entire process.
Huh. I don't think I've ever heard anyone view regulators as like in such positive light. So I gotta give you kudos on that. I mean, that I would look at it as a pain in the butt because I'd be like, get out of my way. I want to do something so cool. But you've got obviously a different perspective here.
Well, think about why they're here, right? They're to protect us. Because, I mean, it's like why were rules created in the first place is because someone did something in the past and then hurt someone else. So that's usually why the rule was then put in place.
Right.
So they're here to help people, not to actually be a hindrance. Yeah.
I feel this is where my rebel spirit, my East Coast. Are you originally East Coast? Because you're in New York now.
So I've lived both on the East Coast and in the Midwest in St. Louis, Missouri.
Okay, so I'm falsely attributing this to the being on the East Coast, but when you said think about why rules are here, my first thing was for someone to break.
That's the entrepreneur in you. You just have the balancing act, right?
It's a balancing act, you know.
In the middle.
I look at rules as guidelines, and you follow the rules. You know, you make sure you don't. Yeah. Anyway.
Well, that's like Pirates of the Caribbean. It's like parlay.
Yeah. What is
parlay? Hard rules. Yeah.
Yeah, it's not a rule, so to speak. No, but I totally understand, and actually, I think that there's a lot to be said there because, you know, especially when it comes to financial products, the history doesn't always look so good on the institutions that have been in charge or have been the ones controlling the money. It doesn't always look good because, well, there wasn't always good practice. So ideally, the rules that are put in place should both benefit and protect the end consumer. And so I have to applaud you for that because it's a very consumer centric approach. I don't know if you can see it. You can kind of see it right behind me over my my one shoulder on the wall there. It's one of our values here at Avail is customer centricity. So, you know, I can appreciate that approach as well. We'll keep it moving here because I want to keep. We'll go into one area that I like to go into with pretty much every guest is funding, if that's okay with you. So I looked you guys up on Crunchbase. I don't know if Crunchbase is accurate for you guys. It says you've raised a little bit of money. Can you tell me about what you guys have raised and if you plan on raising more?
Yeah, so the last financing round we did was for approximately $4 million. And it was led by Alan Patrikoff of Graycroft Ventures. So he was the founder of that group. And then actually the co-lead was also Thor Equities, a $20 billion real estate private equity firm. And I would say in financing, like when you're going to raise, figure out what you need to raise, who you want to raise it from, who you want to be in business with, since when you're going and taking other people's money, two things are happening. One, at least with me, I get very anxious and I want to make sure that I do everything in my power to create value and do what's best for everyone. Actually, that's what keeps me up at night is just making sure that I do right by everyone that we deal with. But the other thing is, and I sort of joke with this, you spend more time with the people in your office and the people that you do business with, at least I do right now, than I do with my family and my significant others.
Yeah.
But make sure you like the people you're going into business with, since it really is a marriage of one sort or another, and it's a multi-year marriage. So you have to make sure that you're okay going and talking and working with these people every single day.
Yeah. Yeah. I mean, and obviously, you know, that's both like who you're hiring, who you're partnering with, and then, you know, could also extend to investors. I'm assuming you're not, well, maybe you are. Are you positioned up in your investor's office or?
So actually we are, our office is in one of our investors' buildings.
Okay. Yeah,
so like we sit sort of side by side with them as well. So see them literally every day.
Yeah. I mean, that even further emphasize, like, make sure you're doing business with who you really want to do business with. It's not just the go out, get a check and then have some champagne with a fancy office.
No, not at all.
And will this will obviously then get you guys through into pushing the company live, put the product live. I was curious though, by way of the platform, are you able to basically self-fund yourself through the platform at all?
Yes. The only thing that you have to take into account is how quickly you're looking to grow.
Okay.
It's a cost benefit analysis of saying, okay, if we take this amount of money, what metrics might we be able to hit more quickly than if we were doing it ourselves? And then also you can potentially bring strategics, which can also bring outside value to help you open up markets and then also align yourself with the goals that they're looking for as well.
Yep.
So it really is a breakdown, and for every single company and sort of co-founders who are going through this process, it's something you have to analyze carefully, because sometimes you don't need to do a venture capital round. You might look for private family offices. You might look for private equity. You may look to take venture debt first, which can also cover you if you're looking to hit certain metrics. So understand what your cost of capital is and what you're actually looking to use it and achieve with it. And then make your own determination.
I didn't ask you this beforehand. Is your background in startups and finance?
So my background actually is primarily in real estate private equity. I did actually sort of co-own a small retail clothing company that we sold back in 2018. Okay. I'm actually based out of Lexington, Kentucky. So
I like Lexington. I've been there. Well, man, it's been years, years ago. But I liked it there. It's a nice place.
It's gorgeous. It's horse country. I don't know if you've ever done the Bourbon Trail. It's a lot of fun.
No, I've never been on the Bourbon Trail. I went there back in the day when I was an announcer for a professional stunt show team. So different life, different career. But I was just a carny. The short of it.
I love it. Well, next time you make it down there, try and make it to Keeneland, which is the local racetrack.
There it is
in Lexington.
Yeah. Well, but I appreciate you sharing that, because obviously you have an astute understanding of, I think that's the right word, a good understanding. I'm gonna just use that one, of how to think about funding your business through raising money, whether it's a debt round or whether it's an equity round. There's things to weigh there, how fast you want to grow the business, and even how important is that to achieving the business goals. I mean, sometimes fast growth doesn't make the business do better. I think this, we're probably entering a season where we're going to see more and more cases. I don't think we'll see a lot more as pronounced as WeWork, but we're going to see a lot of cases where growing fast and raising lots of money doesn't equal best.
Mm-hmm. And also, on the WeWork note, I actually think WeWork was a fundamentally good company and helped expand the market. It was a market leader. I think the problem actually was just pricing and valuation, where instead of going at it at $40 billion, it might have been a $4 billion. So it's the whole idea of making sure that you're pricing companies appropriately.
Yeah. I mean, that's all a matter of framing.
Yeah.
How you frame the deal, or even perspective, price anchoring. I guess those all kind of baked into there. But I mean, that was a factor of like 10x though. So it's kind of
so there was a slight
slight detail there. But yeah, no, I appreciate you sharing that though, because I know that listeners of the show are other founders. Some are already working in, they're pursuing their seed or Series A, and then others are still aspirational. And thinking through of like, when should we raise, or should we raise, and even who do we get that money from, and all that. I just think that there's a lot more than what the common headlines point to. And I would say go to Twitter, but like, VC Twitter right now, I don't know. I can't sometimes read through the jokes. I can't tell what's real anymore, because the real stuff is actually the same as the parody accounts. Which shout out to Zach Aarons, who turned me on to following more parody accounts. because now I can't help it.
Well, now you can't tell what's real and what's not.
Yeah, I can't tell anymore, but it also makes my day that much brighter. I log into Twitter and I get all the entertainment I could ever want. Very cool. Well, okay, well, let's keep going. Before we digress too far, we're going to move on to one of my favorite segments of the show. This is called For the Future. For the Future is where I get to ask each guest who comes on the show to give their best predictions based on the following 4 questions. Drew, are you ready to play?
I'm ready to play.
All right, let's do this. Question number 1, what does LEX look like 1 year from now?
So I may be sitting here and having the same conversation 365 days right now, and then talking about the successes that we've been able to hit. So, I mean, number 1, having the product come to market, and then sort of educating as many people as possible along the way, and then being able to provide more capital solutions to more real estate owners, and then allowing investors to participate on the other side as well.
Very cool. Question number 2, and I know we didn't really get into this. Maybe we did a little bit with WeWork, but what will prop tech as an industry look like 1 year from now?
So it's interesting, right? Because we just talked about WeWork, and then that got people sort of a little bit down, slowed down a little bit on the sort of co-working space. However, we've seen that even after the sort of headache of going through WeWork, we've now seen that prop tech has continued to continue strong. So at least my prediction is that we'll see a similar trend, since it's a really large asset class. And there are so many issues still to address, and we can still continue to optimize. I'm very optimistic, actually.
Yeah. I like to hear that. I think that bodes well for both of us, as well as this show.
Yes.
All right. Question number 3. What's one industry trend you think will continue, but you wish would go away?
The gray hairs and the wrinkles that come from dealing with commercial real estate owners, I think will continue, since it's an educational process on both sides, right?
Yeah.
And when you're dealing with industries that have been around for so long, it takes a little bit of time to educate, but once they're educated, they help educate themselves and others in the space. So I hope actually it'll sort of this status quo as is right now will actually start to go away, because there'll be slightly more faster adopters coming into the space. But I do think for both sides, we're bringing in a new product that they haven't really seen. So we get to go to school and educate.
Yeah. I love that attitude, by the way. I before we get off the line here, I have someone I want to introduce you to. So ask me about that after the show, just because of what you just said. All right. Last one here. Question number 4. What's one thing you believe will dramatically change or fade away in real estate as a result of technological advances?
I think, and this is a really interesting one, and I'm really excited about this, there's been such a lack of transparency, both sort of on a micro and even a macro level in many cases, on what exactly is happening, and also the integrity of the data we're receiving, sort of across the board, everything from title insurance all the way to where a lease is actually executing, what the true sales price were, what tenant improvement or concessions were given, who was paid what, when did the deals even actually execute. It's amazing. It's surprising that we have so many uncertainties and we're not fully sure how accurate our data is. I think we will have over the upcoming years a change away from that and actually truly go to the fundamentals, so we can actually do quantitative analysis with quite certainty on the accuracy of the information we're dealing with.
Man, I've probably shared this story before, but even down to, and I don't want to say the most basic, but the most basic residential transaction. So in a previous life, I was a residential real estate agent. And on my very first deal, because of the brilliant way I decided to use a blank addendum, I ended up confusing the title agent, who decided not to call me and asked for clarification. They just decided to count our concession twice. So a $12,500 concession turned into a $25,000 concession. And no one knew this until the net sheet was released from the title company, like 3 hours before closing.
Mm-hmm.
And just because I was a new agent, I didn't know that you weren't expected to read it. They didn't expect me to read it. So I read it because I thought, I don't know, this is paperwork and it's legal. It seems like the thing you should do for your client. And I read it and I was like, oh, there's a problem here. And I called them up and they were so shocked that I read it. They were so shocked I read the net term sheet. And what blows me away more when you just said that is the fact that those details weren't even available to my client prior to 3 hours beforehand. Now, I could have written up, and I shouldn't have written up an estimated net term sheet for them. Like, they should have seen that beforehand. But even still, there was nothing to provide the clarity of that until they got to the signing table. And then what are you going to do? You can't back out at that point. All options have been exercised. You can't get out. So, I think you're right. The transparency as to what's happening in the deal all the way along, even down to the simplest of deals, has to increase. There's just no way around it because people just don't know all the pieces involved in this. And it's honestly, it's unfair. I like to equate it as this, for people, if you're inexperienced and you want to, go FISBO or buy without an agent, and then you go up against an agent who's experienced. It's like, you ever played Catan, the board game?
Yeah.
Okay, play Catan for your very first time, never ever opening the rule book against someone who wins all the time.
Not going to be a good situation.
No, it's terrible. Now, just apply that to hundreds of thousands of dollars for the average consumer. It's totally unfair. And I don't want to say the system is rigged. I don't believe it's rigged. It's just not clear. And so you kind of hit a soft spot for me. I think it should be more clear. And I think that's better for everybody.
Yeah. And just have an open playing field, right?
Yeah.
Just have transparent information being accessible to everyone.
All right, I'm off my soapbox. We're going to move into the last three here. Sure, these questions are more about you, so we get to know you better. The first one is, what are you reading?
So right now, I actually just started Ray Dalio's Principles, and it's been an interesting read so far, I have to admit. I just started this like 3 days ago.
That's okay.
I'm not very far. But I like to sort of balance sort of books that can help me grow and learn. And then there's also sometimes just a fun little tidbit of going back and dealing with some fiction that can also make you sort of question and sort of figure out how your brain is working. So I just finished up Sherlock Holmes by Sir Arthur Conan Doyle. So it's a nice balancing act of, you have the brilliant minds on one side who's fictional, and then brilliant minds who are actually participating in the markets right now.
Yeah, I can dig that. Question number 2, who are you learning from?
Everyone, I have to say. It really is everyone. I'm talking truly our investors, our partners who are working with in the markets, the great team that we built here at LEX. It really is. Every single day I come to the office, I feel like I'm learning something new, and it's sort of an experience of growing together. Same thing, not even just within the team, but also with the investors, our partners, and even the financial institutions and real estate owners we're working with. Since with the financial institutions who are like already integrating with, it really is an experience because they haven't seen this product. So they're not sure if it's going into their public equities group, is it going into their real estate group, but they primarily deal with debt, is it going into their alternatives group? So it's sort of fun because you're going to learn every single day. And I think when you stop learning, that's when you stop growing. And so I'm lucky enough to have the opportunity to grow with all of these people together. And in many cases, they're the industry leaders.
Yeah.
So it's also fun getting to work with them.
All right. Very cool. And then the last one here, what inspires you?
So I would say I have a few inspirational models. One, my close family members, my parents, since without them, I wouldn't be the person who I am today. Mm-hmm. And then I would also say one person who I really look up to is one of our lead investors, Alan Patrikoff, since, in my opinion, he's a titan of industry. Since he's been doing this for longer than I've been alive, and he's forgotten more than I will ever know. It's just a privilege and an honor to work with him and learn from him, since, I mean, he's created a multi-billion-dollar private equity firm. He then created a large venture capital firm and is known as one of the grandfathers of venture capital. So I look to be able to follow in his footsteps, and I don't need to make the same mistakes as others have. I can learn from people who have been down this path, and that's sort of why we're here, to always continue learning, because why make the same mistakes?
Yeah, no, I would totally align with that. And it sounds like you've found someone pretty great to be able to learn from. Good on you guys. Drew, this has been a lot of fun. I really appreciate you being able to take the time and share so much of what you shared. And I think what you guys are working on is pretty cool. Excited to get the email to let me know I can sign up for the, how did you call it? The early intent of it. Interest?
Indication of interest.
Indication of interest. Is that a specific industry term?
Yes, it's
okay.
Actually. So not everyone
term
other rules when going through this pre-offering period where you're testing the waters, but we dot the I's and cross the T's and check it 3 times.
Well, you're good. You know it. You nailed it. Before we close out, I want to give everyone an opportunity. If they want to get in touch with you or learn more about LEX, where do they go and how do they do that?
So one, feel free to visit our website, which is www.lex-markets.com. And then also, if you want to reach me directly, feel free to reach out on LinkedIn. And also my email is drew@lex-markets.com.
There it is. And I'll also have a bunch of links in the show description or notes. You can find that all on technest.io. So if you want to just get the quick links to everything, you'll be able to find it there. We're going to sign off from Facebook and stop live streaming. And then, appreciate your time. We will catch up. I'd love to check up in a year from now, see where you guys are at. Because obviously, at that point, I'll get to see how well my investments are doing. We'll get to do a live on air. How's my portfolio? That'll either say something good about me or good about you, or hopefully.
Yeah, you might be an industry leader in the space.
All right. Well, I'm going to go nurse this cough, and then we'll check you later.
Thank you, Nate. It's been a pleasure.
All right.
Well, that's it for today. Thanks so much for listening to the TechNest podcast. Hey, don't forget you can get on the email list so you never miss an upcoming episode. That's technest.io. That's technest.io. Get on the email list. Go to the App Store, whether you found us on iTunes, Stitcher, SoundCloud, wherever you found us. Leave us a 5-star review and share it with your friends. And if you've got a guest or someone that you'd like to recommend, or if you think that you'd be a great guest on the show, hey, send me an email, nate@realteampanda.com. That's nate@realteampanda.com. See you guys later.